Okay, my voice is audible. Everything fine. Okay, now before moving to the next chat pattern, as we were discussing in the group itself, there was a small conflict. Conflict in the sense there was a discussion between a few complex versions of head and shoulder, top and bottoms. So I will not go by all these complex versions. I will only describe one complex version, and I will tell what exactly happens when we see these complex versions. And to mention the chart which was yesterday being posted by Siddharth sir, that was inverted head and shoulder IHNS, and uh, especially for Rajesh sir, you considered it that the left shoulder was wider rather than the head. Uh, it should be only taken the price should be taken into consideration. It can be a wider one, and the wider left shoulder from head is not even considered as a complex version. It's being considered as a normal version also. So it's not even a complex version of IHNS. It's a normal, you can see a normal scenario. The only thing which was missing in that was it was not a complete IHNS because of few more things you have nicely collected. That one is the number of candles was not sufficient, and the other one was it was not given a breakout. The upper side movement was still pending. So that was the only thing which is which was pending. So before moving to that, let's see a few complex head and shoulder top version which are being described, which are you could easily find all these things while looking into charts. So let's see few of complex versions of HNS top. To my findings, what I have seen is everything is almost similar. The reaction part is almost similar, how they react, and few more findings are you'll be finding two out of three complex versions where volume recedes in the sense volume declines. The major changes which you will find in is like uh, adding few more heads or soldiers or even both. Suppose what we have studied is HNS stub should be, if this was the HNS pattern which we have studied, just a minute, just ignore this part, I am not talking about this. It should be having a prior uptrend, and it could be like this. So what exactly we'll be finding in complex version is, in that class also I have shown you one complex version. In the complex version it can be like, if this is the left shoulder, this is the head, you could also find like this being the complex version. This in the sense, here you could find double shoulder. It can be possible, like it's also possible that two left shoulders are possible, two heads are possible. It can be of like adding few heads, few shoulders on each. You can even see two left shoulders and two right shoulders. These are considered to be as complex versions. So in short, expect for appearance there is not much difference between a normal head and shoulder top and a complex one. So invalid head and shoulder is considered when it is not breaking out with prior amount of volume in the volume in, I mean to say, while breaking out from the lower level or higher level, there is insufficient volume attached to it, and it should look at least like a head and shoulder. It can be a double head and shoulder, or I will be moving into that part also, like how many times it is actually being considered as to be effective if it's not a proper head and shoulder or a complex version. Even I said like almost you will be finding out of three complex versions, two are having like decline in volume. So in that cases, it's like it doesn't give the proper breakout or proper target which is being taken, are not we cannot get that. So if this is to be considered as a complex version, you will be finding volume declining in the case. So it's almost it can be considered as an ineffective head and shoulder pattern. It's also the same in case of a normal head and shoulder also. If there is no volume, we consider it not actually a proper head and shoulder. But in this case, one more thing to notice is, if you will be finding this type of pattern, if volume doesn't decline, if volume is in higher side, then it can be a effective head and shoulder pattern. So we need to confirm once only when it crosses this level with high volume, so that we can say, we'll discuss a live example which was exactly being discussed in the group itself. I was also in the wrong side of the trade. I'll be telling what exactly it was. So it can also move to further upper level. It can, after that it can move to side trends. So one more finding is, pullbacks at right shoulder normally hunts the performance. Like if you are seeing this kind of pullbacks to again upper level, and if here also it doesn't break and pullbacks to upper level, it actually hurts the performance of the pattern. Doesn't give this range. This is the target which you have discussed. It doesn't give this range. And one more thing you should consider is, if this breakout is less than 5%, or 5% in the sense, comparing the price itself, if you are going for MRF and bigger stocks, then 5% could be a larger price changes. So you can take somehow, like if 100 rupees is the share price, it should at least decline to a level of suppose 10 rupees for 2 to 3 days. If it's considered, then only you can say that yes, this is going to be a valid breakout, and it should reverse, a trend reversal is possible. So I have already said that if this is the pattern, it could give a breakout in the downside, or it could, even from here, it could go in a trading range. So these are the possibilities. Let's see one chart which is being discussed in the group itself, and see how I was in the wrong side also. I think Rajesh sir has given that chart. Just a minute. Yeah, is it visible, the Sibla chart? I think at this point of time, at exact this point of time, I will tell exactly what happened to this. Okay, now at exact, let me just do it, this point of time, Rajesh sir posted a chart considering it to be bullish in nature, and it was having sufficient reason to that. It was unable to break the support line and moving upward. Another thing was there was an increase in open interest, I think so, that was being considered. So I was also looking into the chart. I was also thinking the possibilities were, and even there was a decline in volume. So what exactly I was looking, the if the stock is having difficulty in breaking the support line, and there was an increase in open interest of call options, then there might be an increase in uptrend. Even the stock moved few points upward, but it again find this, sorry, not this one, find a resistance itself and came down. And at this point, this breakout point, it break out with higher volume, and this was being posted exactly before 2 days, I think so, by Surajit sir. that his findings was exactly basing upon the HNS pattern, that it broke out with higher volume and considered it to be, and today itself it moved. While the market was moving upside, today Cipla moved downside. So there was no reaction from the market, there was no help from the market to move downside. It totally was a chart which is based on technicals. So this is where I find this one as an interesting finding. Like even the market was moving in upside, this stock didn't participate in the movement, and it reacted exactly as the chart suggested. So we can look into the chart for a few more days, like if is it able to sustain in this 2 to 3% of decline. If it sustained for more, you mean to say 1 2 days more, then we can expect further downfall in the stock. So this is how a complex versions also work. I was telling about out of three complex versions, two versions will be having decline in volume, but here you can see there was a steep volume, then suddenly it's increased, and even that was a selling volume. And if you consider this from this part, you will be seeing there was continuous selling volumes, only few buying volumes are there. So approximately we can say that this stock is even expected to fall more levels. So before moving to the next, let's see few guidelines to identify a complex version, so that it could be easier for us to see how exactly we can predict a complex version. One more thing to see tell you is, if whenever you are looking into a chart, looking into for a chart pattern, it's better to be with a line chart rather than a candlestick, because candlesticks are having pin bars onto it. After that you can switch to candlestick after finding these charts. But if you are going for candlesticks, you will never find a proper HNS pattern. So whenever you will be like you want to see, we have discussed that we'll be having few 1 2 sessions, or we'll be discussing only live charts onto that. So whenever we'll be finding all these things, we'll be considering line chart into our analysis. And after that, after analyzing the chart pattern itself, for further analysis we can use candlesticks, we can use candlestick for price actions. But to find these, it's better to go for a line chart. You can see how clearly a line chart shows what exactly happens in the price action. So before moving to that, I mean to say, let's describe few guidelines which are considered to be how to find all these patterns. So let me switch to another board. Okay, so the head is not much bigger than the shoulder. So in this you can see the first guideline itself suggests the head is not much bigger than the shoulder. The first, this part itself, just a minute. Let me take this chart to another, or else we can do one thing. We can draw this, and suppose this is exactly what we are trying to learn. So here you will be finding, in major cases, head is not more than the shoulders. So it is a general description, it's a guideline, it's not the rule by which we should go, it's a general guideline. Volume is usually high on the left side than on the right side. I was telling from the very beginning that volume tends to decline, usually seen comparing with left with right. The volume trend recedes if we consider pattern as a whole. If we will be considering this pattern as a whole, then volume will be declining. And if you consider this two also, left shoulder with right shoulder, then also you will see left shoulder will be having maximum volume than right shoulder. So a key one more key identification criteria is the complex version symmetric between two shoulders are usually seen. This is where I haven't drawn it like the way it is suggesting. It's suggesting that if this is the head and shoulder pattern, then you will find that this to be symmetric, this two shoulders to be symmetric in nature. So it is a normal finding. Usually you could find that if it's left shoulder, or if it's the head number of heads are two, then you will be finding like the size of this two, either two right shoulders, two left shoulder, or two heads are almost similar. So let me clear this once more. Is the two heads being similar or the two shoulders being similar, it's not like we are not comparing left shoulder with right shoulder, we are comparing left shoulder with left, head with head, and right shoulder with right shoulder. So now the most important part is the failure. So if we will know the failure percentage, or failure how exactly it gets failure, so we will keep ourselves away from this. The first failure can be noted is price falling to close below the neckline. What it suggests is, if this is the pattern, price falling to close below the neckline, it falls but not with a major change. In the very first note I was telling, you should consider that this fall should be at least a 5% fall. If we are not getting this 5% fall, it's approximate finding like 3 to 5% fall. If you are not finding that this is price is not moving in lower region for more than 5%, then it should be considered as it would be failing. The chat pattern could fail. So these are few findings. What it's only one finding, this should fall 5%. The other finding is like it should trade below this neckline for 2 to 3 days. So these are few findings of the complex version as we are discussing in the gap. So we have also discussed in the group, so thought of to throw few ideas how exactly it should be traded. So we can also find few complex versions and discuss in the practical sessions also. And this is a very nice example. And both way we are as per the theory being considered, both way we are right. As per Rajesh sir, it was considered to be in bullish in nature, but it could not sustain to that level. And the findings from Surajit sir was also superb, like he could find this to be breaking this label, and it was a complex head and shoulder pattern. So now let's keep this in mind, and we will see how exactly it is reacting in for the coming days. So there are a few more kinds of complex versions almost similar to these. You can add few more heads, few more shoulders, and nothing apart from that. The reaction is almost same, which I was telling. So let's go for another chart pattern, that is double top and double bottom. So it's also an interesting chart and quite easily being found in the market. So let's move on to that. So if possible, we will discuss one of this today, and so that If today we will complete double top, we will keep double bottom for tomorrow, so that if I will discuss double bottom itself tomorrow, then who are not present in today's class will actually catch it quite nicely, because it's almost the reverse of double top. So today first we will discuss double top. Double top is also a reversal pattern. It somehow looks like this. We do not consider any neckline over here. So this is top and this is top. It is also being named as M pattern. We have already discussed during Bollinger Band class M and W pattern. Double top is considered to be as M pattern. Double bottom is considered to be as W pattern. Double bottom is just opposite to this. No, zigzag pattern is something different. It has more tops and bottoms onto it. When we'll find extended double top, it's called as a zigzag pattern. These are two lows. We will come to now. This is double bottom. So we will describe double top first, then we will move to double bottom. So let's move to double top. Actually, it can be what exactly Rajesh sir is asking is it like we can only consider double top and double bottom, or it can be extended to few more labels. It can be extended to few more labels also, but the major pattern which is being considered is double top and double bottom. There are patterns I will discuss in coming classes, which are not exactly double top and double bottom. They are named as Eve and Adam. We have Eve and Eve. I will discuss what exactly they are. A double top with Eve, a double bottom with Adam. It's a various kinds of patterns taking all together into consideration. We will discuss all these things. We cannot discuss the whole total number of patterns which are available or being found in the charts, but the major ones we will discuss. So moving to double top, a double top is a reversal pattern which occurs following an extended uptrend. Or let me draw this one so that it will be easier to understand. Okay, a double top is a reversal pattern. It should, the prior trend should be a uptrend, as discussed in previous classes also. There should be a reverse trend, should be another trend to reverse. If it's a bearish reversal, then the previous trend should be bullish. If it's a bullish reversal, then the previous trend should be bearish. So it is suggestible to sell when the price breaks the below the reaction low that is formed between the picks. So this is where is considered to be as, this part is known as reaction low. So if at all we are going to trade using this, this is the point where you can take a sell call. We will move into that clearly. The double top must be followed by an extended price rise or uptrend, which I was telling, like there should be an uptrend. So this could be written as the rule number one, that a previous uptrend is necessary for a double top formation. The two peaks may not be equal in price. I have drawn it quite nicely so that it's looking we we will not find this kind of things in market. We will definitely find some, this being in higher price, this being in lower price, but as I'm discussing in this class, so I have drawn like this. So the two peaks may not be equal in price, but should be same in the area with minor reaction low between them. The most important part to remember in double top is this gap. I mean to say, the width, you can take it as a guideline, the width to be same, almost similar in nature. A minor reaction, a minor low or high is possible, but it should be almost similar. Like in HNS pattern, we have I was telling right now before some time, like a wider version is considered to be as a normal HNS, but in this case it should be almost similar. I will tell exactly what I'm trying to tell. So the actually this actually works with a view of potential downside. So why this is being considered as this gap should be similar? If this is seen in the market, then it is considered to be as effective double top. Even before it comes to this label, this neckline breakout label, we can consider that this double top could be an effective double top formation, a reversal pattern. So let's see the theory behind the appearance so that it will be more clearer. What exactly the theory behind this is, if this is the double top, let me write down so that it would be, this is what is a reaction low. This should be considered as price moving higher. This was a prior uptrend, and here we could say price moving higher to form a new high. So this is a high, this is considered as new high. Again, it's followed by a downside movement. No, I'm not talking about a all-time high, but a high. Yeah, exactly. A recent high for this trend, which is being continuing. All-time high is altogether different thing. So followed by a downside movement. This is what a downside movement is, and this upside movement could be noticed with low volume. This could majorly we will see that this double top, like the previous high would be more than this, the second high. Many a times you will find that this high is maximum price, and this should be at least less than that. A 3% up and down is can be considered, but it's better if you find this below the previous high. I will describe each leg separately so that it will be quite nicely being understood. So in some cases previous high is never reached. I mean to say this high, in some cases you will find that this is never being reached to that level. So that is why I was telling that if it's below that, then it's better. Pattern is said to be complete once it breaks this level. It moves down with volume. So this is the reaction low. Once the price breaks below the reaction low, we can say the pattern is complete. So now we would look onto when we can expect a breakout. It is actually officially said to be viable only when the reaction low is penetrated to the downside. This is what I have already said, that this is officially considered to be as a complete double bottom only when this reaction low, here there is no neckline, so you should not draw a neckline like this is the neckline. The major part to see is the reaction low. When the reaction low is broke out with volume, then we can say that yes, the double top is officially can be considered. And remember one thing, this increase in price from reaction low to the right right peak, you can say, should be with less volume. The volume while increasing this price should be less. That is when we can consider yes, that as the volume are not there, it should not be able to sustain at this level, and it should move downside. So, and again with an expanding volume in the case, I was here, it should be considered officially viable when it breaks this reaction low, and here also it should be with volume, with higher volumes. Targets could be considered. I will move into target when I will tell each and every part individually, break each and part individually and describe. We can expect many variations, but if the trend is from bullish to bearish, the double top will mark at least an intermediate change. Intermediate change in this, what I am exactly trying to say is, if you are looking for a 1-day chart or a weekly chart and you are finding that it was bullish and moving to a bearish pattern, then we may not say that this change is for a primary trend reversal, but it can be for a intermediary trend reversal. So intermediary in the sense, this can be a trend reversal for few more months. So this is what one observation could be taken into consideration. One thing to note, if you are looking for reversal, if exactly we can, as said, we can trade at this point. This is actually messed up so much. So this is reaction low. This is actually where we are trying to take our trade after this being broken. We could watch this from this level, but being technical analysis, we do not trade before that, before getting any confirmation. Okay, so this is what I am telling. This is reaction low. This should be with increase in volume. So one thing you can note is, if you're looking for a reversal, then until key support is broken, it cannot be confirmed. So this is considered to be a key support. I will tell just because why it is being considered to be a key support. As on we go, move on, we can see what exactly happens. So if at all you are taking a trade, it should be from this level. A sale call should be from this level, not before that. A few traders can actually take when they see this rise is with less volume, but it could be a riskier trade. Okay, let's move to every individual part so that we can consider it nicely. So let's break each part and learn the same as we do in our charts earlier. So the first thing, let's take this. This is not the neckline. This was a prior trend. This is where it should break out. So the first thing to remember is the prior trend. So it's quite easy to understand. I have already mentioned that prior trend should be a uptrend. Prior trend should be uptrend. So first rule is complete. Not rule, a guideline. A prior trend can be considered as a rule itself. We need a opposite trend for a reversal. So a prior uptrend is required, and that to be, please note down this point. This should be at least for 3 to 4 months back. This uptrend should be at to the least possible. It should be before 2 months. This uptrend should continue before 2 months. So this uptrend should be for more than 2 months, greater than 2 months. This uptrend. That is why we are considering that if this breaks out this level, then it should be an intermediary change in trend reversal. So intermediary change in trend reversal means it can be considered to be in reversal for more than 2 months. So when this is considered to be more than 2 months, this should be also more than 2 months. Now considering this part, the first peak, it marks the highest point of a current trend. This is where exactly Rajesh sir was asking that this high should be considered as the all-time high or the trend high. So it is the trend high should be considered. Now coming to the next part, that is the decline part. Once the first peak is reached, a decline takes place that may be around 10 to 20%. So this decline should be considered around 10 to 20%. It can be in any range of in between this. You can notice even one more thing is few instances the decline can be little. Just a minute, this is an important finding. I should draw this one. If this was a prior trend, this moved up and this decline. So what normally happens, this decline is actually here from you will find that this decline could be like this. You will never find like this type of formation. This decline could be roundish in nature. So this is an important finding, and a very good marginal increase in demand can be seen. When there is a decline from this level, you will find if at all it's uh, in trading in derivative, you could find there is increase in open interest. There is increase in volume also. At this decline itself, there is the increase in volume, so as this could again move to upper level. So now considering the second peak, this one, the advance is usually seen with low volume, and this is what I have considered, that few traders consider this to be the perfect point to trade if they are onto like the taking trades for higher return. Then there is definitely higher risk involved in it. So the advance is usually seen with low volume. At this increase, you could see when there was a fall and the fall was roundish in nature, you could see increase in volume. But when there was an increase, you could see less volume. And the rally is expected to reach the resistance level. If this was the resistance level, this is the highest expectation from this rally. The formation possibility expected only after the resistance is met. If this is the resistance, it can be considered as 3% up and down, but maximum time it should reverse from the resistance level, this being the resistance, as this was the peak before that. It should reverse from this or before that. After considering this reversal, it could be seen that, like few charts being posted in the group itself, that it is a inverse HNS pattern information. The same can be considered like, yes, this is a double top information. So this is where we can say that this is going to be form a double top, but not before that. The normal time period between peaks can be either for from few weeks to many months. This is an important part. Like, this is the first peak and this is the second peak. So this gap, this is also very important. This gap could be between 1 to 3 months. It is a normal consideration from 1 to 3 months, but it can be from few weeks to many months also, this gap. So please note down this one. This is actually important in considering resistance and support. If this gap is less, if it's below, like finding double top in hourly chart, and this gap is almost only for 1 week or even less than that, then it's normally being the trade is not being taken in that case. So this gap should be at least for a minimum level, you can say 3 weeks to 3 months. So this is what exactly I was trying to tell when I was discussing about this, the peak, the price in peak. So now see, the second peak can be within 3%. That is maybe either more than or less than previous high. This peak I was talking about, this should be in between 3%. Now coming to the decline from this peak, this decline, the decline in the second peak is witnessed by expanding volume. This is again the major thing which need to observe. This should be with higher volume, the decline. Again, in all these patterns, volume plays a very important role. We can never ignore volume. Only by seeing this pattern we cannot say that this is going to happen. We every time we need to see the volume itself. Even when you guys post charts in the group itself, I ask for posting charts with volume so that I can say that yes, this is going to happen or not. So it's better if it's marked with gap during the fall. One major thing which I need to tell is, if this is a normal pattern, which is this, if this is seen with few gaps, then it's considered that this is the gap, this is where it's not being traded. uh, I just missed what exactly, just a minute. So Rajesh sir exactly want to ask, when we find the round drag before the forming of second height up, with criteria may not match the right. No, width criteria is for either for what exactly I suggested is from 3 weeks to 3 months. So if we are going for a rounded track, then why can't it be possible? It is possible. We will, when we will go for live charts, you will see all these are quite nicely being, but we will take line charts so that it would be possible. The only problem, well, this part is rounded. The only problem would be finding the reaction low, where exactly the reaction low is. But it's never difficult to find the gap between this peak. So I was talking about these gaps, these two gap. So when there is a fall from this second high, and if you see few gaps forming while the fall is being considered, then it is considered to be actually going by the double bottom observations or double bottom formation. So this decline can have few more things, like first one I said, if gap is there, then it's considered to be effective. The second one is the decline should be accelerated decline. I mean to say this, like in the previous one I have said that this should be an uptrend for 2 months, but in this case the decline should be as fast as possible, so that it can be considered as, it's not like to see as fast as possible we will consider 15 minutes chart and say that this decline today itself. If we are moving, if we are seeing at in a weekly chart, then it should decline in a weekly chart itself. So it should be an accelerated decline or a gap down decline. Such fall, then we can make sure that the forces of supply, now again each pattern should be considered with demand and supply, as I have said. So what exactly this tells is the forces of supply are stronger than the forces of demand, and this fall should test the support. If this is the support line, the support and resistance should be drawn before that. If this is the support line, this fall should test the support. It should come to this level, and we are not even going to take a trade before this. So this is what is all about the upper part of this pattern. Now coming to the support break, if this is a support and this breaks, one more thing to be considered as, why I said that this should be for 3 to 3 months. If this is the gap between two peaks, then the reaction low could be considered as a major support, because there is a almost a gap of 3 to 3 weeks. So it's almost, if it's 3 week, almost it's 15 days session. So 15 session to form this reaction, to form this support. So if this the gap is more, then we can say the support is actually considered to be as a major support, and only when this major support is in broken, then it can be a nice trade, it can be a possibility of selling. We have already studied about resistance and support, so this is why I am exactly telling why this support is quite important. And for this support we need to consider this gap. The more the gap between the two picks, the more the stronger is the support. And if a price breaches this support level, a stronger support, then it's quite common in technical analysis is it could fall for a more further level. This is why this pattern is considered to be as effective. So the support break, as said earlier, a double top is not complete unless and until breaks the reaction low. It's not complete unless and until it breaks the reaction low. And one more thing you can consider is, if this gap is less, if the gap between these top two highs are less, then you need to find another support level. This could not be a major support, this reaction low could not be a major support, we need to find again another support level which it breaks. So this trade could not be from here. We need to wait for another support to break. So that trade would be completely different from a double top trade. That trade could be like a support break trade, but it we cannot consider, we cannot say that we are taking this trade just because there is a break from the reaction low. So the breakdown from reaction low should be with volume. This should be with volume so that we can consider to be effective. Now coming to the price target. Here the price target is, this is a double top. This is where we could take the trade. This is where sell signal rises. The price target is from this to the high. To the high in the sense it could be for this high or it could be for this high, whichever is more. So this is the target. Again, for targets, I have already mentioned these targets are just a target to, like, you can consider this as a target. This could fall to this level, but before that we need to again see what are the supports before that, what if it's from upper side, what is the resistance before that, that these all should be considered. So that we should not keep our trade even before a major support, even after a major support or before a major support. So now the support, this is the target which I have said. We could measure this one and could find this target. Few instances it also acts like the HNS pattern. It could again retest this neckline, this support, and this could be considered as resistance, and it could move from this level also. Now please note down few things which are considered to be important things. The first thing